Hello and welcome to today's very weird Fat Tail Daily. I'm actually in my car, which is probably good for the acoustics. I've plugged into my hotspot on my phone because I wanted to catch my good friend Nick Hubble, who is about to fly all the way back to Japan from Barcelona, and this was the only chance we were going to get to do the video. So Nick, how you doing, buddy?
Yeah, good, good. Everything sort of getting ready, getting packed. And we just thought we better have something here for the viewers, right? So
Yeah,
it's last
exactly.
minute. It's going to be chaotic, but it's a good topic, and it's really big in the news right now too.
Yeah, 100%, 100%. Just final thing on the flight. I do not envy you flying that way with how many kids? Three? That's mental. Mental. So anyway, Nick, your piece, as you said, really topical, and it's a very fascinating read too. Now you just describe a shift from central bank driven markets to markets that are driven by more government or geopolitical market movers, really. So my first question is for private investors who have since around 2008 gotten used to what's become known as the Fed playbook. What key indicators or information sources should they now be looking at or monitoring to stay ahead of geopolitical shifts, basically?
Yeah, for the last decade or even more, the focus has been on the personality and the background and the comments of central bankers and the powers that they may or may not have, um, who their connections are in business. All of that's going to apply in the same way. It's just that the key is now politicians and the civil servants, the senior civil servants at the top of places like the Treasury and so on and so forth. Because those are the ones who are going to be driving financial markets from now on, just as central bankers were the key over the last decade or more. And this is going to be a lot more difficult now because politicians are a bit more unpredictable and odd, although they do spout out a hell of a lot more information as well. The point is being that the paradigm has shifted, and what I really want people to know and understand is that it may have taken you many years to understand and realize that central bankers were in control a decade ago, and I don't want that same thing to happen to people. I want them to understand that the world has changed as quickly as possible so that they can update what they're expecting from the world as quickly as possible. I don't think it's going to be as stable or as easy a world as it was under central bankers.
So when you say stable, what do you mean? Because do you mean that all the tool they really had was to flood the world with cash, right? So you kind of knew that money was going to go somewhere, wasn't it? I guess, but that didn't necessarily make asset prices stable, did it?
Well, not stable, but the idea was that if something went wrong, central bankers would just print enough money and lower interest rates
Yeah.
enough So, I think you might remember I gave a speech about this where I made the audience chant back to me that they'll just print more money. So I said, there'll be a pandemic, and the audience chanted back to me, they'll just print more money. There'll be a war, they'll just print more money. There'll be a financial crisis, they'll just print more money. And it worked, right? It worked until inflation came along in 2021. So we had a period of more than 10 years where no matter what went wrong, central bankers were able to overwhelm that impact by, like you said, just print more money, just inflate things. And so stock markets really only had one way to go in the countries that did this, at least. So it was like a floor under investment markets, and you could be very optimistic that stocks would eventually boom. The worst thing you might have is a very brief bear market or correction, basically because central bankers couldn't afford to allow a proper crisis to take hold. Under a political system, I think things look very different. I think they've got a lot of other goals and tasks other than financial stability, inflation, and employment.
You mentioned that investments benefiting from geopolitical chaos are kind of rare or hard to find. But beyond the obvious choices like gold, what lesser known sectors or asset classes do you see potentially benefiting from this new era of heightened geopolitical risk?
Yeah, I suppose the other obvious one is the cryptocurrencies, right? They tend to do well when governments are cracking down. But that what you're really asking me is, can investors play this geopolitical risk to their advantage? So over the last few weeks,
And can they, or is it too risky to do that in and of itself? I mean,
well, you don't have a choice. You don't have a choice.
that's
My
true.
point is, just as you don't have a choice about central bankers controlling the market for the last 10 years, you don't have a choice about what politicians are going to be up to now. So I think the investments you should be looking for are the ones that benefit from geopolitical trends. So defense stocks is the obvious example here. We've got President Trump demanding that Europe pays for its own defense instead of relying on America. That means more defense spending in Europe, so defense stocks have gone up, and that's something we've taken advantage of in Strategic Intelligence Australia, for example. There's lots of similar plays about energy. The world's sort of been split by Trump into, friend and foe, and the energy companies in the foe countries are doing poorly, the energy companies in the booming countries are doing well. There's also this question of net zero, where if China's not really following net zero policies and the US is not really following net zero policies any longer, who's going to stick to it? Who's going to sacrifice their economy? Which voters are going to be willing to sacrifice their economy and elect politicians that are willing to do so for much longer? That implies a boom in fossil fuel energy, and obviously a continuing bust or a worsening bust in renewable sector electricity projects. So that's just some quick examples, but we've had already a real flavor for this over the last few weeks, right? We've had, each time President Trump announces a new pick for his various cabinet and secretary members, it causes a massive move in the stock market. My point is that this isn't a short-term phenomenon now. The geopolitics is starting to dominate and will consistently do so for quite a long period of time. In good ways and bad, mostly in bad ways in my opinion, but you might disagree with me about that. The point just being, nevertheless, you've got to focus on how geopolitics and politics is going to impact financial markets a lot more than we're used to.
I'd never thought I'd hear the day where Nick Hubble would prefer the central bank shifting the market over politician. But is it just like the lesser of two evils?
No, it's just a shift. It's just a change in the way this is playing out. And by the way, I'm not so sure I prefer the central bankers, because I think that artificial imposed stability in financial markets actually causes a lot of the economic problems that we have. I'm for laissez-faire, not having any central bank and not having any government interference. But the point is, it doesn't really matter. You've got to take the world as it is. So in the end, investors have been, and the key is just to realize that the paradigm has changed as quickly as you can. There's so many people in financial markets who sort of, their careers came of age in a particular time period where a particular set of rules applied, and they failed to realize that the rules have changed. The bond and bull and bear markets that tend to last many decades are a good example of that. If a bond bear market has begun in 2021 or 2022, that's a radical shift that is going to be very difficult to actually realize has already occurred unless you're aware of these huge cycles throughout history. And I'm arguing that one of those has just occurred.
Yeah, right. Your analysis of the SMR, the small modular reactor story, shows it's a good example of how government intervention can create, just as it can create risks and malinvestment, it can kind of create unexpected opportunities as well. Could you share any other examples where seemingly negative government policies might create counterintuitive investment opportunities?
Yeah, there's this story of the Trump tariffs, which is sort of interesting, where some people, they've dumped their decades-held-long ideology of free trade in favor of tariff just because Trump has decided they're a good idea. The same people cheering on Javier Milei's free market policies in Argentina are suddenly pro-tariff when it comes to Trump, which is a bit ridiculous. But there's an argument that this is a negotiating tactic. So what Trump is saying to the likes of Europe is, the EU especially, they have very high trade barriers. America has quite low trade barriers. Australia's somewhere in between, by the way. So Trump is saying, I'm going to give them a dose of their own medicine, and they're either going to dismantle their trade barriers, or they're going to get American trade barriers against European goods. So the comment that he made, and I think it was the G20 or the G7 many years ago, is why don't we just have free trade? Another comment he made supposedly with a European leader years later was, how many American cars do you see in Europe versus how many European cars do you see in America? It's ridiculous. We should be selling American cars into Europe just as much. It's unfair what the EU has done. So if Trump succeeds in cracking the nut of European protective trade policies, then that should cause a pretty big boom in trade, which is precisely the opposite to what everyone's predicting from this tariff policy. So my suspicion is that just as he threatened to abandon Europe on defense unless they increase their defense spending, he's saying to the Europeans, unless you lower your trade barriers, we are going to give you a taste of your own medicine. And there's a chance that they will lower those trade barriers. So hopefully we're going to get a boom in free trade that will completely mystify the Trump voters who've been told, tariffs here, tariffs there, tariffs everywhere. And perhaps even the same goes for China, that we get some sort of a weird resurgence in free trade rather than trade protectionism out of this. It would echo foreign policy as well, the idea that he goes around threatening everyone, but that ends up causing a period of unusual peace and geopolitical stability in the world. Trump's always a bit counterintuitive anyway, but there's some good examples of opportunities there. In the industrial stocks that are getting absolutely slammed right now, especially in Europe, on the back of these threats of Trump's tariffs. The opposite could play out.
I tell you what, our colleague Greg Canavan, he's also highlighting what you might call a counterintuitive or contrarian play in China. He's actually quite, I would say bullish on China, but he sees value there because the world's opinion on trade with China has been affected by that very threat from Trump's made with tariffs too, right?
Yeah, very similar story. China's obviously trade protective in different ways. They focus on their currency manipulation. That's another good example of how things could unfold here in uncertain ways if the Chinese decide to revalue their currency. We're not even sure which way it would go as well, by the way. There's a few different arguments either way. That might be one of the big risks. Japan's another good example with it. They've got inflation now and they've got interest rates moving now, an impossible level of debt. They're going to have to do something at some point. Hopefully the yen crashes even more and decreases my cost of living even more. But these are the sorts of things people should be thinking about now, should be reading about now, should be learning lessons of history about now. The world where central bankers control everything is sort of coming to an end.
Final question, Nick. You've successfully predicted several major market moves by understanding central bank dynamics in the past. In this new geopolitically driven market environment, how has your personal approach to analysing investment opportunities evolved? Or has it? Or do you just, I don't know. I'll say one thing. If you look at the track record, the portfolio of strategic intelligence at the moment, it's actually really pretty strong. And that's partly, that's all down to you, isn't it?
It's evolving. My methodology is evolving. I've been lucky in the last few months that I've been focusing on geopolitical issues anyway, and will continue to do so. But those have been isolated examples, and doing that's what has made me realize that this is where all the opportunities now lie, and where the triggers for change in the world lie, which is what's made me realize and write the article for today that people need to start thinking about these geopolitical issues more than anything. The big topic in the news right now is that there's a bunch of cables, internet cables, that are getting cut in the Baltic Sea in Europe. Possibly by some Chinese vessels. And this is happening all the time. But power cables are getting cut and nobody knows who did it. We had the Nord Stream 2 projects get blown up. Nobody still is entirely sure who did it. So there's sort of this subsea cable war and pipeline war going on in Europe, which tends to precede a proper war. These are the sorts of issues you now need to be on top of as an investor, as annoying as I remember when central bankers started to take over financial markets, and it was so depressing to think that these academic bureaucrats were going to decide the fate of your portfolio. Well, now it's a bunch of mad politicians. So you're going to have to update your thinking, and I'm trying to figure out how to do so. It's certainly coming less naturally to me than the sort of economics understanding of how central banking and fiddling with interest rates and the money supply works. But that's my job now. That's our job, whether we like it or not.
And what an interesting job it is. So we'll keep this conversation going and it'll keep evolving, and we'll just keep updating readers every week on a Friday. Thanks, Nick. Much appreciated for you taking your time. I know you're pretty busy. And I think that's about it, isn't it?
I hope so.
Yeah. All right, mate. Take care. Safe flight and chat to you soon.
Thanks, mate.
Thanks for tuning in to FatTel Daily. If you're ready to take a new approach to building wealth, avoiding the same old mainstream ideas and investigating new market trends, then make sure to hit the subscribe button and turn on post notifications so you don't miss a single video. And as a thank you, we've got a free report just for you. It is packed with actionable insights that show you how to capitalize on an alternative investment idea that you'll unlikely find anywhere else. You can download it right now by clicking on the link in the description below.
So, if you're ready to discover strategies that the traditional market just doesn't offer, grab your free report. Until next time.